All right, welcome everybody. Boy, you can't make up these times. It's like a combination of an Orson Welles and a Fraser Thomas Sunday afternoon, like Sink the Bismarck type shows. In reference to Joe Biden dropping out, CrowdStrike with the blue screen still not being resolved. But we're going to start from the top and work our way down real quickly. CrowdStrike, 3 days down, I think might have the fact that it slammed on the lows. I'm going to take a little stab tomorrow, depending if it even gets there. There's a gap in the market that's left from back here in January 8th, moving average crossover area, somewhere between 48. That's old high right in here. Call it 40 to 50. I don't know what you want to call that, but sometime during the day, I'm going to be watchful, maybe the extended hours pre-market. If we get somewhere down in there, I think you got an opportunity on an one more thrust to the downside. 3 days down, my thinking from a psychological element is that they're going to recover. But if anyone was like maybe day trading this from the other day that bought it at 301, today was a disaster for them. And what happens even now is if someone decides to liquidate and that sells, it just generates more selling pressure, and we come down, we fill that gap. So what you want to do is probably watch for CrowdStrike as just a quick trade. It might be good for $30-$40, at least back up to 86. So again, if it gets into the 248 to 254 range, look for there. That's my support. Those are my conditions that I'm looking at. What indicators would I use to help me? First off, I would not use a 5-minute chart. I would use maybe a 3-minute chart, and we can always change a 3-minute time frame here. We're using TradeStation at this point. Thinkorswim works just as well. Wealth Charts is another one. Fabulous product that we have our indicators on. And here you have what I would use is some kind of a bullish convergence setup. In other words, if price makes a newer low and you get a higher low reading in the volume indicator, then I would go with a quick trade. I think after a wipeout of 3 days of this type of proportion, filling that gap, there's going to be some buyers that probably step in, and then anyone that was long that's taken heat that didn't get out, another $10, just $10 to $15 just might do it. So, I mean, that's my pick a bottom trade for tomorrow, by the way. So it's not anything else other than just an oversold extreme move coming into filling a gap on a company that's widely used, as we all know now. How much of is extensiveness of their clientele base is it, right? Snowflake, enterprise software. We've got ServiceNow with earnings out tomorrow. I believe it is after the close. Now is ServiceNow. Is it tomorrow? Or no, it's Wednesday after the close. My bad. Tomorrow is a different company called Google, Alphabet. But I think ServiceNow, Snowflake, Salesforce, those are names. Here's Salesforce CRM. Generated a daily buy signal today. So it really would have to break out above 256 on a closing basis. This could be a new leg higher. And so watch for that breakout at a daily close over 256. Gives you kind of like this extension trade where the market rallied, it pulled back, small correction, and then it gives you the impression it wants to try back to get up to the 280 mark. There's 280. So on it, Salesforce is another one. We don't have to worry about earnings out tomorrow. Tomorrow morning, earnings is going to be before the bell. It's going to be Comcast, CMCSA, parent company, NBC, CNBC, Golf Channel, Peacock, Universal Studios. Universal had a movie called Twister out. I'm not sure that's going to all fit into their guidance. But boy, look at this volume indicator. It's just this huge rounding bottom with a divergence. In other words, price made new lows on weak volume. This is been probably a disappointment trade for a lot of traders, thinking that Comcast was going to do well. The Olympics, you've got a presidential election year. Ad revenues are going to be probably off the charts, right? Now that the Democratic Party kind of has maybe I guess an injection of a new leader, vitality in Kamala Harris. We'll find out. But needless to say, just expect a plethora of ads coming down the pike in all media. And Comcast is, again, Xfinity, your cable provider, obviously TV, entertainment, and then Universal Studios. So that's all under the guise of Comcast. So Comcast does have earnings before the bell. You know, it's either going to rally. If it breaks, if it pulls back, it's going to pull back and it'll be ugly because everyone looks like they're in it already. Daily charts show that people have been buying. The buying pressure has been building here since probably 38 and change. The weekly has been in accumulation mode. And even the monthly charts show that people have been long this thing forever, just not getting any major return. So that's tomorrow morning's open. How do you trade it? Here's the problem. If everybody's already long and there's bad news, they're all going to get out. And so the dip could get significant down to maybe, and I don't know if that's the case, but you know, at least 35 would not be out of the realm on a kind of like one of those bailout types trades, right? So it could be interesting. That's if it's negative. And the implied move is only $1.50. So this could really be, you know, if it over accelerates that implied move, I think that you have a better after earnings opportunity to get into a stock that pays the dividends that going into the third and fourth quarter, probably more likely we'll see better gains ahead. All right. So that's my 2 cents there. My scan showed a few things here coming into today I thought was weird. The only thing, Dollar General, not weird, but we were looking at Target the other day, and we have a position on that. It didn't really go anywhere, but it's in a weekly buy. It had a nice little pullback. Yeah, maybe I could have gotten a little more cheesy with my or deeper in the pullback. I didn't. We set our stop in the right place, and that was from the last video we gave you. We already had a comment that someone said they're going to wait, and that's okay, and that's great. And thank you for that comment about your technical analysis. I'm just sharing with you what the overall trend kind of looks like. We have this shoulder head, and the right shoulder hasn't completed its development, but we have these long shadows in here. The volume was looking okay. The relative strength, the PMC started to improve, and so I felt that, you know, somewhere in the retail space, we should start to see some upside out of consumers. And we did see a strong retail sales number. Burlington, I 10 to 1 or the other, but Burlington was up today 3%. Burlington Coat Factory, can you imagine that? I just don't think that discounters, TJ Maxx has always been the better trade, more widely popular held stock. But in the retailers, those were some, I guess the Burlington was the big name. But what I wanted to focus in on, and it's in here somewhere, this is today at the end of the day, what generated buy signals. Obviously, Meta generated a buy signal. And here's the one, it's iHeartMedia. So is iHeartMedia, it's a penny stock, $1.45. There's a company called Spotify. You guys know who Spotify is. And Spotify does have earnings coming out tomorrow before the bell. So, I mean, if it shows that Spotify is doing well, maybe iHeartRadio media is doing better as well. That just seems to be what the scans have picked up. I'm not quite sure how that information is going to help you tomorrow morning, especially since the report comes out before the open. But just keep in mind, iHeartRadio, I mean, it looks like someone's been bottom picking in here on the volume perspective at $1.45. I mean, where could it get back to? 238, easy in a heartbeat, not a big deal. So we have the one that I think we should address, the 800-pound gorilla, is Google. And one thing that I would point out is that Google had, I mean, the contract high was on July 10th. We had a print of $1.93 or 193. And I saw it today going all the way out to the August 16th expiration. I believe it's around 4,000 with volume today on the 190, 205 call spreads. That's a 15 wide spread, but the spread was going for about $290, $3. Let's just round up and say $300 a spread. So it's a 1 to 5 risk reward ratio. But someone's not playing it for this earnings for this Friday. They're playing it going out to August 16th. So they're anticipating maybe Google does all right with earnings. Then you come in with a PCE number on Friday, and then you get by with the Fed, and you're playing that all the way going out to August for a new contract high out of Google. And it would seem to me if that trade might pick up. So tomorrow during the day, obviously the videos are after the market closes, so I don't want to give you after the fact information, of course. But something that's actionable, you may want to kind of see if the market trades like just stays within today's range or a little bit higher on Tuesday turnaround. The volume was okay on the on-balance volume. The intraday volume was mixed. The monthly volume doesn't look like, I mean, large-scale institutional traders are still on the bandwagon, and depending on their it's not going to be just their revenues, but their guidance. Are they making money with all the investments in NVIDIA chips and artificial intelligence? And what are they doing with it? And so that's going to be the breakdown going forward. But is it hard to imagine a newer high or a high testing $200, the round number on Google? Not at all. So therefore, I think that's why someone put that trade out there. We have a lot to cover every day this week. I mean, obviously, like I said, it's a cross between with our headlines: assassination attempt of a presidential running candidate. You have a president that announces he's not going to run due to either age or disposition of, not having 100% of faculties available. You have or at least noticeable memory lapses. Then you have a president, vice president who's been not nominated, but just supported. And here we come in with not just geopolitical issues, but again, it's the vote around the world. I mean, what's going on in Europe right now, and especially in France. Then you've got little Middle East tension, not much there, but it's the Federal Reserve, interest rates, and earnings, and all of that kind of thing that's driving this market and the volatility. So there's this wall of worry out there that gets us going up and down, and we've seen some pretty unprecedented. This is the wall of worry, and this is what volatility does. You don't see a huge trend. It's a wild, wicked, newer low. This market made a newer high, then a newer low, then a newer high, and this is meta, by the way. And nobody seems to want to be a major buyer. Long shadows on a monthly chart up in here. So my 2 cents is fill the gap, get up, maybe fill, re-challenge this area of where it broke down from, which is about 514. I mean, that would be a logical spot of maybe offering something of resistance in meta until we get into earnings for them. So we've got the heads of the 5 family, as I call them. You've got your Apple, which didn't do well, your Meta, your Microsoft, and as of all of those that weigh on the Qs, if we get just a little bit more upside out of the mega cap names, it just definitely shows that people aren't going to be wanting to sell technology. Enterprise software, such as a Salesforce, possibly today we had a high close doji. It's blinking right there, that orange candle. It's a small one. Volume wasn't fantastic. Volume was 4.3 million. It does 5.3 on an average 10-day basis. But Snowflake in software application, data, cloud storage. So again, companies that are in that space that have integrated artificial intelligence have been the buzz, but they've all gotten sold off dramatically. Maybe we can get a little short covering route out of that with positive news in like and kind companies, like, for example, Google tomorrow. Last one that's coming out tomorrow is Tesla. And quite frankly, I'm mixed on this. We did a great trade on Tesla. I haven't been in it since we did get out with a nice profit on that trade, and I posted that on these YouTube videos. Going forward, I'm a buyer on a dip, maybe 213-ish. I just don't know how to have a trade on it right this very second. But if it does dip, and it's because of maybe guidance, then I'm a buyer. And I think if we do get that market back to 213, I think it'll find strong support. 211 to 2. I don't want to be too precise, but this old swing high between 207 and 215. There's the wide range that I would be looking to be a buyer again. In this market, I think it's one thing you got to walk away with is you have to be selective. You have to have risk management. It's tough to buy breakouts. It's tough to buy stocks that already did break out because they break out and then they fail. They look like they're going to break out, and then they just slap you in the face. And it's my job not to, give out that pie in the sky analysis, but also to keep you aware and keep you grounded so that we do make money. And that's what the purpose of me giving you some analysis here is, how's these indicators working and how are we trading off of them? With that said, if you like what you hear, give a thumbs up. And if you have other comments, we're certainly there to see and help you with reading those. Thanks for your input. And with that, have a great rest of your evening.